Good morning, Richard Calhoun, Creekside Realty, 40 years of serving clients right here in Silicon Valley. We are in 2021. Here is a list of the URLs that you will need to get information. We will move on to the first slide. Here we're looking at the magnitude of overbidding. This is single family homes. These are homes that have sold that closed in the last week. And so the redder the area, the more the overbidding is. So you can quickly oversee here in the scale that Cupertino is the highest at 105.2%. That means when you take all the transactions and average their overbidding, they're getting 5.2% more than their asking price. At 100%, there's no color, 110% at saturated red, and at 96.5% at saturated blue. The only one that's showing up blue at all is the Menlo Park, Atherton, Woodside area, and they're getting 99.4% of what they are asking. Here's what I call the frequency of overbidding. This is how common is the overbidding. What percentage of the sellers are getting more than their asking price? You can see it's much more intense red. You can see a lot of the areas are up around 70% of the sellers are getting more than their asking price. Again, the lowest area is the Menlo Park, Atherton area at 30%, along with the San Mateo coast at 38%. Pretty significant increase between 30 and 38%, but they're both below the 42.5% where there's no color. So the more intense the red, the hotter, the more frequent overbidding is. This to me is the single biggest indicator. It's days of unsold inventory. Days of unsold inventory tell you how rapidly the market would sell out at the current rate of sales. So you can see the red is really fast. Solid red is at 24 and a half, which historically we never got that fast. So I thought I was safe. But if you look up here, you can see a lot of these areas are in the 12 range. Cupertino, Sunnyvale is an unbelievable 9.6. Again, the slowest area is the Menlo Park, Atherton, Portola Valley area, sitting at 64 days. So it would take them 2 months to sell what's on the marketplace. Here's looking at the days of unsold inventory in each of my 22 micro market areas. And what you're looking for is the trends here on the right-hand side. Are the lines level, which would be a stable market? Are the lines going down, which on days of unsold inventory would be an increasing speed of the marketplace, a more rapid marketplace? Or are the lines going up, which would be a little bit of a slowing of the marketplace? And basically right now you're at the holidays, so you're having a lot of fluctuation. You can see there's some pretty significant drops and peaks up and things like that. This is data every single day. I'm not sure there's a trend worth noting there. This now what we're doing is we're looking at the annual cycle. We're saying that real estate has a very significant annual cycle. The gold line is the 5-year median from 2015 through 19. And then the blue line is the current data. So with days of unsold inventory, it's currently below the gold standard, and it has been for quite a while, all the way back here to, like week 24. And so because the current data is below the gold, that indicates the market's faster. Moving on to the three different components that we have the blue line, which is available inventory. Now I'm going to pause a second here to say that I'm just a tad concerned because if you get a huge amount of supply, that's going to slow down the marketplace. And look at what's been happening and unnoticed by most people since week 39. We've been getting more and more inventory. We're now at almost 40% more inventory than we normally do. And I still hear people talking about there's no inventory, there's no inventory. There's 40% more inventory this last week on the market. Well, actually, as of last night at midnight, than there has been in the last 5 years. And those 5 years were all good years. Now, I'm not sounding the alarm, but I'm just waving the caution flag that something's going on. Why am I not raising the flag? Well, you can see the number of new listings has been going up at a much higher percentage. I mean, except for this week where we're down to like 20%, and a holiday week, that's pretty little activity. But a lot of these weeks we're somewhere around 160% or more above the normal number of new listings. So the number of new listings coming on the market is huge. But then you go over to the offer side, the sort of the red brown line here, and the number of new offers is almost as high, which is why the total inventory, the reservoir, the supply, is only going up slowly. But it's been going up slowly now, unchecked for 13 weeks, 14 weeks, and you're now getting to be 40% above. So it's just worth noting. Here we're looking at the number of active listings, and we're looking at my definition of active listings, which are not anything that's in escrow with a pending offer. And some people do count the ones that are continue to show. I do not. But you can see the 5-year standard is just over 750. If I had to take a guess, maybe 770. And now the inventory is up here at about, I would almost say 1175. So you have somewhere around 400 more homes. That's that 40% more inventory that I was talking about. And just to be clear, what we're talking about now is Santa Clara County, San Mateo County, single family, condos and townhouses. So, that's the whole micro market. What's the mass market doing? And what we'll see in a minute, there is definitely differences in that large area on how areas are performing. Now we're looking at the number of new listings. Same concept. The gold standard is where the 5-year median, the data is the blue line, and you can see the pattern is shockingly similar, which is why I'm doing week to week comparison. There's a huge weekly cycle. And when you have a shift like this, it's just because I think this was the Labor Day shift. Labor Day came very late this year, so it fell into the next week where it was the earlier weeks for most of the 5 weeks, previous years that I'm using for the benchmark. But you come down here for Thanksgiving, you come down here for Christmas, and the pattern is very similar. But again, you can see that you have more new listings coming on the marketplace than the number that you'd expect to have. Again, it's not necessarily just the number of new listings that bothers me, but it's the fact that the reservoir is building up. So number of new offers coming in is also high, but not keeping up 100%. And here is the number of new offers. So you can see the number of new offers, the blue line is above where you'd expect, and it's been that way since week 25. We clearly had a slowdown here in the pandemic, but that's a shorter period of time. And when you start integrating all these extra transactions, before long, it makes up for the shortfall that we had back here. Here is looking at the frequency, and I'll point out right off the bat, you look at this, and last week I think I talked about, this looks like a bad data point. I went back and I did not check the data that I already gathered in case there was a mistake in my data gathering process. I went back and regathered the data. And because it is live database, you won't get the exact number, but it was pretty close. So for whatever reason, there was a run up and then a run down where if I was just expecting it, I would have expected the line to come down like this, but these data points are real up here. So that's the statistical fluctuation. That's why historically I've used a 5-week average, and I'm using a 1-week average now to understand what's going on in the marketplace more rapidly. And here is the same concept, but this is showing the 22 different micro market areas. And again, the concept is you come over here to the right-hand side and you look for trends. Are all the lines going up, or all the lines going down, or are they flat? And for the most part, I would say they're fairly flat. You could, like this orange line right here, it's clearly come down, but I probably could pick like this dark blue line here, that's clearly going up, but the vast majority are pretty horizontal. So the frequency of overbidding isn't changing. Now we're looking at the magnitude, and the same thing here. I checked these data points to get the sawtooth, and it's real. That sawtooth was there. So this is the magnitude of overbidding. And right now we're just about 102%. You could remember earlier in this presentation, I said Cupertino Sunnyvale was at 105%. So each micro market area is different. This is when you take all of them together and you take both single family homes and condos and townhouses. That's how you get the 102%. And here is the overbid magnitude in each of the different areas. And again, you're looking for trends over here, and I'm not seeing any huge trend one way or the other. You can see Santa Clara County, the red line through here, it clearly was climbing. And, maybe since about the beginning of December, it's been pretty flat. But if I was to just look at Santa Clara County, even since December, I think it's still climbing. It's just not climbing as much. It's pretty flat. Now we're looking at the distribution of the sale price to list price ratio for a given week. So the current week is down here, which is one of our worst weeks. So you might say, hey, wow, what's happening? Well, things always slow down at this time of the year. And these are comparing weeks going back. So they're not comparing the same time of the year. So these lines out here are your best month ever, and these are for reference only. So the best month ever was April 2018. The best December ever was December of 2017. And then the worst month ever was December of 2020, 2001, and the worst December obviously would therefore be December 2001. So they're on top of one another, which is why it almost looks like a solid line, but you clearly can see some gaps in the dots. So we're having a bad week, but it's the time of the season, so that doesn't bother me. And if you look at it, the pattern is what I would expect. The little dots are the market heating up, then you turn to dash, which are all at the top, and then the solid lines have been coming back down. And again, this is macro data, so it's everything thrown into the blender. And here is just the last 12 weeks, so you can sort of see the trend. And this was actually 3 weeks ago here, which was the second worst, and then we improved. So you can see that there's some fluctuation. And last week, I was a little puzzled and sort of blaming some of what I saw in the election. I think some of this could be the election, because not necessarily the election, but the election happened on the 6th, and then we were looking at the aftermath and then all the news media. So the week after that, people didn't look as much at houses. So the week where a lot of sales would have been reported right around November the 15th, there was less of those. And so buyers felt less competition, so they didn't overbid as much. 35 days later, they're now showing up as closings. We're changing just a little bit. We're now looking at that annual cycle. So we're looking at the month of December. My month of December is defined as December 1st, going for the next 35 days, which obviously goes into the following calendar month, with the exception of the current month. The current month starts on December 1st, just like all the other definitions, but it only goes up to the current day. So this is up through midnight last night. And when you look at this, you can say, wow, that's not so bad. And again, this is macro data, so this is everything thrown in the blender, but it's not 1 week, it's 5 weeks. It's what I call monthly data, even though it's 5 weeks. And you can see we're having one of the better months, or one of the better years. So even though on the previous slides where you're looking at the weekly data and we're near the bottom, that's because of that huge annual cycle. This takes the huge annual cycle in, and you can see the worst year down here, the dotted line, which is probably 2001, and 2017 is your best year. And in between, I don't know how many lines you want to count here, but basically there's about 5 lines tied for second place. Here is the same thing, just not as many data points, so you can see it a little bit clearer. You can see that in the recent years, there's been 1, 2, 3, 4, 5. I'd almost say 6 lines on this one that are tied for second place. So you can see we're a lot better than some of these years in the past. We're nowhere close to 2017. Now what we're doing is shifting yet again, and we're looking at just single family homes in just Santa Clara County. And I'm doing that because that's what I've maintained is absolutely on fire. And you can see, instead of being down here tied for second place with a bunch of other years, it's actually up and away from itself. And this is because people are moving out of San Mateo County because they don't need the commute to Santa Clara County to get bigger houses. Buyers are trying to buy the houses over the condos, so there's more competition in the single family homes. And that's why this year, right now, this current month for single family homes in Santa Clara County is really standing out. Here's the same data, just for not as many years. Here, we're looking at the price map. We're looking at the 10 percentile, 50 percentile, and 90 percentile pricing. The bluer the area, the cheaper the price. The redder the area, the more expensive. And you got the color coding over here, so you can quickly see. The first number is the 10 percentile. The median is the middle is the median, which is what I did coloring on. And then the higher number is the 90 percentile pricing. So whatever area you pick, let's pick Campbell. We can come down here and see some of the cheapest homes that you can buy are $1,000,001 essentially. The median is $1,000,004, and the top end in Campbell is 2,000,000. And so you get an idea of what price range any particular person can purchase the property in. Here is the actual raw data. I do want to point out something that isn't hugely significant, but it's noteworthy. If we look at median days on market and we look at this top line here, it's saying right now, single family homes in Santa Clara County that are on the market, the median of those have been on the market for 51 days. That does not sound like a very fast marketplace. But now you jump down to the pending offers, the offers that were accepted in the last 5 weeks, and that drops to 10 days. So there's this discontinuity. How can you be selling homes? Half the homes you're selling only have 10 days on the market, yet half your homes have 51 days on the market. It's because the homes that are on the market have been picked over and have been rejected by the buyers because of price, condition, or location, and they're not going to sell until the seller does something. They eventually come off the market, expired listing, withdrawn listing, canceled listing, or they do a price adjustment, or they find the buyer that just came onto the marketplace, but that's extremely rare. So what this really does, it should be telling the consumers, if the house has been on market for more than 10 days, there's something wrong with the house. And with being on the market for 10 days, that's probably as quickly as the seller is willing to look at the offer. So if it does not sell as soon as that seller is willing to look at the offers, there's something wrong. And you can see that throughout the areas. South County, 45 days on the market, 8 days for what's selling. East San Jose, South San Jose, 48 days on the market, 10 days. So, that's pretty noticeable. When you get to the hot areas, these moderately low, where you're 15 and 9, that's so on fire. There are no sellers that aren't able to sell their home as soon as they're willing to look at the price. But then you start going up in price again to the moderate areas, 35 and 11, Cupertino, Sunnyvale, 55 and 8. That's the biggest spread, I believe. And then come down to Saratoga, Los Gatos, 65 and 19. And finally, Los Altos, Palo Alto at 71.15. Just wanted to point that out. This is single family homes in San Mateo County. This is condos and townhouses in both areas. And with that, I will pause and see if there are any questions before we go into the details of the last week. So what we're going to be doing now is we're going to be looking at 11 different matrix. We're going to look at 5. There are 5 different graphs. We're only going to look at one. Most of them we're going to be looking at the county-wide data for Santa Clara County, San Mateo County, and condos in Santa Clara County. Occasionally, like on price or inventory, we can look at all 21 micro markets, and we'll be doing so. So here's days of unsold inventory. Again, remember, if days of unsold inventory is going down, the market's speeding up. All 3 lines are going down. Santa Clara County single family home is the hottest, followed by San Mateo County single family homes, followed by condos and townhouses. Now we're looking at the frequency of overbidding. Highest one is single families in Santa Clara County, which coincide with it being the hottest marketplace. Same order, San Mateo County single family, followed by condos and townhouses. Magnitude of overbidding, same order. Single family homes in Santa Clara County, the red line, San Mateo County, the brown line, and finally the gold line, condos and townhouses in Santa Clara County. This is how often the magnitude of overbidding. Now we're looking at median days on the market. Take a look at the condos climbing. The condos were slower down in this period of time, but fairly stagnant. Here we are somewhere just after the middle of November, before Thanksgiving, and all of a sudden the time on the market is just ratcheting up. And this is for the properties that are actually selling. So condos have gone from 13 days for the median up to 29, and they've done that in basically 45 days. That is a pretty significant ramp up in median days on market. Now we're looking at current inventory. It's plummeting down. So, you would normally say surplus inventory isn't a concern here. It's not a concern in the raw numbers, but when you look at how much the drop down is every year, it's less drop down than there normally is. Here is looking at the number of offers. It's dropping down as well. It's hard to see because this is just the raw number. In my opinion, you really have to be doing comparison to what the market normally is doing. Here's the number of closed transactions. It only recently has started to drop off, and that's because a transaction typically takes 30 days to close. So there's that 30-day lag. This is the 10 percentile price. And again, most of these areas are fairly flat. They're not spiking up. They're clearly not going down. But if you jump back to the beginning part of the year, basically everybody's up and at different rates since the beginning part of the year. So there has been appreciation. There's been spikes. And, when you're at the 10 percentile and 90 percentile, you do have more fluctuation. You have more at the 90% level than you do at the 10%. Here's just the 3 benchmarks so you can see. And if we look at Santa Clara County, somewhere around, maybe that's 870 might be the median, the 10 percentile price, and it started off at 800. So on the lowest 10 percentile, there's been about a 10% increase in price, which is not bad for a year, especially a year with pandemic. Now we're looking at the median for all 22 areas. Same concept. You can see a couple areas here. This dark blue area has gone up quite a bit recently, but it was also up here. So, were these artificially low? Was it a little bit of the mix of the property? It's hard to tell. And that's one of the advantages of seeing multiple lines. This gold line is interesting. It looks like it rolled over, but you come back here and it started off at 2 million. It went up to probably maybe 2.15, and then it's back down to 2 million. So long term, it's fairly stable. And part of the problem you have is when you're looking at micro market areas like this, and one of the reasons I went for 5 weeks is to get more data points to get stability so you can tell what is a change in the market and what's just statistical fluctuation. Here are the three benchmarks. Now it becomes pretty easy to tell your condos in Santa Clara County are just over 800,000, maybe 810. But at the beginning part of the year, maybe they were at 785. So it's gone up somewhere around $25,000 on a basically an $800,000 median price. So, that's only about a 3% increase. But if you do the same thing on single family in Santa Clara County, you're at 1.2. You're now at 1.4. If you call that a $200,000 increase on 1.2, you're somewhere around 15, 18%, 17.5%, something like that. And then in San Mateo County, if in both of these, they were going down, so they weren't really flat. So it's hard to really take. Santa Clara, I sort of did here as a flat. If I do the same thing in San Mateo County, I'm probably at about 1,425, and now you're up to somewhere around 175. So there's about a $325,000 increase on a 1.4. So that's actually had a higher appreciation. You know, that's actually a little surprising. I wouldn't have expected that. I'd have to check my math, which I can't really do that well on the fly. If you come back just a little bit and you pick a number here, that's probably closer to 1.7. And if I go up, use a little bit a higher number down here at 1,450, that's still 2,500 increase on 1.4. So that's still 15%. I would have expected it to be a bit lower than Santa Clara County, but it's really holding in there. Moving on to the 90 percentile pricing. Here you have more fluctuation because when you're at the top end, prices bounce a lot more because there's no top end and there is a bottom end. And you can see this one is probably Portola Valley or the expensive areas. Yeah, I would say that this line here that I'm pointing out is probably the San Mateo County expensive. Of course, it's the most expensive area. So, it's fluctuated anywhere from up to $12 million down to 6 million. Now, is that saying that people's value of their home is changing that much? No. What it's saying is the homes in the top 10% are changing that much because all of a sudden you may have back here a couple homes sell for more, say 5 homes sell for more than $14 million, and that pulls up the 10 percentile price. Here, they're not happening, so the price fluctuates a lot more. Here's the three benchmarks again. And you can see they're fairly flat. They're well more behaved because you're looking at the county-wide data instead of a micro market area, so you have more data points. Here's duration of escrow. I should delete it. There's really nothing there, but what it's basically telling you is all three counties are taking 30 days to close escrows. Now what we're going to do is we're going to look at days of unsold inventory since I think it's the most important thing. You have the raw numbers here. We're going back in time and we're going to December 5th. And what I'm going to do is do a slideshow and step through and change the colors. Now, the first three slides are going to jump a little bit, but the third, fourth, and fifth have the right scale, which is what I'm hoping to get to long term. And I think you can start seeing what I was hoping to do. So the redder the area, the hotter the marketplace. The blue areas are the cool marketplaces. So here's 1 week later on the 12th. Here's 2 weeks later on the 19th. Now it's going to be hard to notice the change because the map's not going to move, but look at the color. So you can see how the Palo Alto area here got darker red and lighter. So here you are back on the 19th. Look at right this area where it doesn't move. Now it's a little darker red. Now it's a little bit darker red even. So that's showing you the market's accelerating. What I was hoping to do here, and I think I finally got it worked out. So going forward, we can do a little slideshow and see what areas are improving and getting worse. And then here we're just showing you where we stand. This is single family homes in Santa Clara County only, but it gives you some sort of historical perspective of where we've been for the last 20 years. And with that, I am done the presentation unless I have a question. So I will pause, look for questions, and if I don't get any, I'll call it a wrap.